My test. Okay, so very good evening, students. Welcome to another session, 2026 A level accounting rapid revision. So, yes, I think in the last class we have discussed company accounts. I think the last class 2023 paper. Okay, 2023 paper we have discussed in the last class. So, today we are going to discuss the 2025 paper, 2025 company accounts paper. So please read the question. Please read the question. Okay, so I will explain how to do the answers. Okay, so if you look at the question in the 2025, the format is very much different, okay, compared to the other company accounts papers. Okay, the format is different. Okay, the way of asking the questions also a bit different. Okay, so please read the question. I will give you 10 minutes. Okay, after that I will explain one by one how to do this paper. Okay.
Okay, yeah.
Okay, so we'll start with the question. So Janaka PLC is a manufacturing company that produces a single product. The company was incorporated on 1st 4 2024, which means it was incorporated on 1st 4 2024 means the company was started at 1st for 2024, which means our beginning of the financial year. Okay, so if the company was started on the present year, present financial year, there won't be any opening balances. Okay, so there won't be any opening balances. Okay, simple as that. Okay, so the drafted financial statement is given below: sales, cost of sales, gross profit. Okay. Summarized trial balance is given below: manufacturing plants, office equipment, okay, right to use, inventories, cash, okay. So we'll do with first additional information. Okay. So before preparing the final set of financial statements for the year ended 31st March 2025, the following information should be taken into consideration. Okay, so yes. Okay, like this. Yes. Some a student have messaged me that my mic is not visible. For my mic it was not audible. Yes. My mic is now audible now. Okay. So yeah, my mic is audible. I think you need to check your network connection, Pita. Okay. So yes. So where I was, yes. We'll start with adjustment number one. The composition of operating expenses used in the preparation of drafted income statement as follows. Admin expenses, distribution expenses, depreciation of manufacturing plant is given, depreciation of the office equipment is given, factory building rent, income tax paid under the self-assessment, okay, and total operating expenses 32,500. Several expenses items, including manufacturing expenses, have been erroneously included in the above operating expenses. Okay. So we have to correct that. Okay. So the depreciation of the manufacturing plant is the first thing, and factory building rent is the second thing that was mistakenly included in the operating expenses. As we did in the question A level paper 2023, those manufacturing expenses needs to be included in the manufacturing accounts. Okay, so yes, so we have to include that in our inventories. Okay, so we don't know what the proportion of cost of sales and the closing inventory. We'll look at that. Okay, so in the second adjustment, they say the inventory shown in the trial balance has been measured based on, which means accented, which means measured. Okay, so accented based on the manufacturing code erroneously calculated in the preparation of the after the income statement. Okay, and shown in the trial balance has been measured based on the manufacturing cost erroneously calculated in the preparation due to non-inclusion of some manufacturing expenses. Okay, the cost of the finished good is equal to 1/5 of manufacturing cost. There were no raw materials and no work in progress. So as we did in the 2023, so if you look at the 2023, we had a pattern of manufacturing accounts, and 2025 we had a pattern of manufacturing accounts. Okay, so in the 2026, I think we can hope the manufacturing account question as well. Okay, so yes, so they are telling the inventory shown in the trial. So I'm again reading that adjustment. The inventory shown in the trial balance has been accented based on the manufacturing cost, okay, erroneously calculated in the preparation of draft income statement due to non-inclusion of manufacturing expenses. So they are telling in the manufacturing, so the closing inventory was calculated erroneously, and they have not included the manufacturing cost. Also, they have included the manufacturing cost when calculating the drafted income statement. Okay. The cost of finished good inventory, which is equals to 1/5 of the manufacturing cost. There were no raw materials and no work in progress. Okay. So, what are the manufacturing cost here? The manufacturing cost here was depreciation of the manufacturing plant 6,000. This is the first manufacturing cost. And second manufacturing cost was depreciation of the office equipment. Absolutely, it's an administration. Factory building rent 2,000. It was the second manufacturing cost. Okay, 2,000. Together, 8,000 is the manufacturing cost. Okay, from this 8,000, 8,000, 1/5 is closing inventory. In this 8,000, if the 1/5 is closing inventory and 4/5 will be cost of sales. Cost of sales. Okay, understood? In the closing inventory, okay, so in the closing inventory, closing they mentioned in the adjustment they mentioned closing inventory is the 1/5 of the manufacturing cost. So the rest of the 4/5 will be goes to cost of sales as we did in the this kind of a same example, same adjustment we did in the 2023 paper as well. Okay. So yes. So how much will be the 1/5, which is 1,600 we need to include in the closing inventory. The rest 6,400 needs to be included in the cost of sales. Okay, simple as that. So cost of sales is 40,000 plus 6,400. Okay, closing inventory. What's the value of the closing inventory? Is 10,000. In the trial balance, it's given plus 1,600. 11,600. 46,400 is our cost of sales. Okay. Hope you wrote that adjustment. We'll go with the adjustment number 3. Director's fee 7,500 and the audit fee 2,100 have been neither paid or accounted. Okay, yes. So I think they have directly calculated it as a operating expenses. Okay. So admin expenses. Okay. So we have to include the director fee. Director fee is how much? 7,500. Audit fee. This is also an admin expenses, 2,100. Okay, so these are not paid. Okay, so payable 2,100 and 7,500. 9,600. Yes, simple as that. Adjustment number 4. Information relating to the property, plant, and equipment. Okay, as for all the items of the property, plant, and equipment are depreciation on the straight line method. Okay, and they were available for the use from the date of purchase. So in the property, plant and equipment, we don't have balances. Okay, we don't have balances because this company was incorporated during the financial year. So we'll start with purchase, okay, and depreciation. Okay. The manufacturing plant was revalued at its market price for 80,000 on 31st March 2025, which means the end of the financial year. Okay. However, this revaluation surplus shown in the trial balance has been calculated only considering the differences between the revalued amount and the cost of the plant. Okay. This plant was acquired on 1st 4 2024. On this date, the useful life and the residual value of the manufacturing plant was estimated as 10 years and 7,500 respectively. Okay. Very interesting revaluation question. Okay. So, what is the cost of this manufacturing plant? Okay. It's not given, but we know the revaluation surplus. Okay, this revaluation surplus arises from comparing the cost and the revalued amount. Okay, so we know the revalued amount and we don't know the cost. Okay, so the revalued amount is 80,000 and the revaluation surplus is 12,500. Okay, so if we are going to get a revaluation surplus comparing the cost and the revalued amount, the cost needs to be small and the revalued amount needs to be less, high. Okay. So if we reduce 80,000 from 12,500, okay, so 80,000 minus 12,500, which is 67,500, which is our cost. Compare this 67,500 compared to 80,000, revaluation surplus 12,500. Okay, but this is not the actual revaluation surplus. The revaluation surplus needs to be calculated through the carrying amount and the revalued amount. Okay, so this is wrong. This is wrong. So we'll find the carrying amount first. Carrying amount, okay, carrying amount for the manufacturing plant, cost was 67,500, residual value was 7,500 divided by 10, which means 60,000 divided by 10, 6,000 is our annual depreciation. Okay, 60,000 divided by 10, 6,000 is our annual depreciation. So our carrying amount will be 67,500 minus 6,000, which is equals to 61,500. If we compare 61,500 to 80,000, the revaluation surplus we get is 18,500. This is the original revaluation surplus we'll get. Okay, so the revaluation surplus is 18,500. Okay, manufacturing plant. Okay, so the accumulated depreciation is given also 5,000. So yes, the manufacturing plant was purchased for 67,500. 67,500. This is the closing balance. Okay. And it has been revalued for 80,000. 80,000. Okay. And the depreciation for the current year is 6,000. And the removal of the depreciation is also 6,000. Okay. Here, removal of depreciation 6,000. Okay. The closing balances is 0 and revaluation surplus will be 18,500. Okay. And the carrying amount will be 80,000. Carrying amount will be 80,000. Okay. So simple as that. I know this adjustment is a bit of tricky adjustment. Okay. So yes, write it first and understand, and after that do the PPE adjustment. After that, we can move to the next adjustment. Okay, so we'll do the next question. Okay, information relating to the office equipment is as follows. Okay, the date of acquisition first 4 2024 and date of acquisition first 10 2024. 30,000, 20,000. Okay, okay. The estimated residual value of the office equipment is 0. The office equipment has been depreciated for the entire year without considering the acquisition date. Okay, the mistake. Okay, I hope you are still writing this. So I will do the working here. Office equipment. Okay. So first asset was purchased on first 4 and then first 10. Okay. The cost was 30,000 and 20,000. Okay. So if you look at the trial balance, Mutha, if you look at the trial balance, in the trial balance, in the office equipment cost is mentioned as 50,000. Okay, so the purchase will be 50,000. That is fine. And the accumulated depreciation is mentioned as 10,000, which means the closing balance is 10,000. What I am saying is this 10,000 is wrong, Ruta, because this 10,000 is calculated without considering the purchase date. Okay, so for this asset, we have to calculate 12 months because it was purchased on 1st of April and the financial year ends on 31st March. But here, from this date, we have to calculate only for 6 months. Only for 6 months. Okay. So, yes. And the useful life is 5 years for both. Okay, so first we'll calculate this depreciation for this. 30,000 divided by 5, which means 6,000, simple as that. Okay, but here, but here 20,000 divided by 5, but it have to be divided into 6 months, which means 2,000. Altogether, 8,000 is our depreciation, not 10,000. Okay, so 8,000 needs to be here. Okay, so not this, 8,000 needs to be here, 42,000. And remember, the depreciation for the office equipment has been added, it has been added in the administrative expenses. Okay, so we have to reduce the overstated 2,000 depreciation overstated, but rather than that we'll put as a 8,000, simple as that. Okay, we'll change that as 8,000. Okay, rather than reducing the 2,000, we'll change that as 8,000. That will be fine. Okay, so the director's fees and all the things have done. Okay, right, so yes, write this adjustment as well. Okay, so I will erase this portion. I will erase this portion. Okay, adjustment number 5. Company entered into a lease agreement, okay, on 1st 4 2024 to obtain the right of use of a motor vehicle. Okay, on this date, the initial payment 20,000 was made. The present value of the lease installment as at 1st 4 2024 was 30,000. Okay. According to the lease agreement, 5 equal annual installment of rupees 8,000 are payable during the lease term. Okay. The first installment was paid on 1st 3 2025. The ownership of the motor vehicle is not transferred to the lessee at the end of the lease term. Okay. The estimated useful life of the motor vehicle is 8 years and the residual value is 0. Okay. The lease interest relevant to the years of 31st March 2025 and 31st March 2026 was 3,126,000 and 2,618,000. The initial payment and the first installment have been debited to the right to use and credited to the cash account. Okay, the initial payment needs to be debited to the right to use and credited to the cash account, but the first installment needs to be debited to the lease liability account and credited to the cash account. The second one is different. The second one is wrong. So that's why in the trial balance, the right to use asset mentioned at 28,000, which is very much wrong. Okay. So rather than going with the வட்டையா கரைக்கன்னு ஒரு சுத்தம்னு போடாம will go in a straight method. Okay, so how we can tackle this question? Simple as this. As I did earlier, Joe to T accounts. I know rather than just calculating the numbers through the calculator, doing the company accounts adjustments through the basic stuff with the basic knowledge. With the basics will give you a quality results, quality answers, Puka. Okay, so you don't have to confuse with them. Most of the students, they might go around, circle around, and they might find difficult to do the adjustment. But what I'm telling was, don't go further. Don't go with complex calculation. Just stick with the basics. Just stick with the basics. If you stick with the basics, you will end up in a good result. No confusion, no hesitation. Just stick with the basic. Even for the property, plant and equipment, even for the manufacturing account, the inventory adjustment I did, even for the SLFRS 16, the lease adjustment, I am stick with the basics. Basics are very much important. So that's why I taught accounting standards before I'm moving to the company account, because the basics are very much important in order to do the company accounts. Without basics, I'm pretty much sure it will be very hard. It will be very hard to do the questions. Okay, so yes, we'll go with the basics. Again, right to use account and lease liability account. Okay, the initial payment was 20,000. Yes, cash 20,000. Rather than putting the description, I'll just put the numbers. That will be enough. Okay, and it has been credited to the cash, no worries. After that, the present values are given. Present values 30,000 debited to the right use and 30,000 credited to the lease liability. Credited to the lease liabilities. Okay, and first installment is paid, credited to the cash, it's correct, and it has to be debited to the lease liability. So first installation 8,000. And the lease interest is given for the year 3,126,000. Now sum it up. 33,126. 33,126. So 33,126, 13,126. 25,126. 25,126. And we have to split it as current liability and the non-current liability. So how to calculate the current liability? Current liability will be calculated from next year lease installment and reduce next year lease interest 2618. 5,382. How to calculate the non-current liability? Total liability 25,126 minus 5,382. 19,744. Okay. So lease non-current liability 19,744. Lease current liability 5,382. Okay. After that, after calculating the current liability and the non-current liability, we have to enter the finance expenses. So the finance expenses will be interest. Interest for the current year is 3,126. And the depreciation is another thing. They have given the useful life is 8 years, but in the lease, I know, I told earlier, the lease we don't calculate the depreciation for the useful life, but we calculate the depreciation for the contract period. But here they haven't mentioned about the contract period, but they have mentioned the number of annual installments needs to be paid. It's 5. If the number of annual installment needs to be paid 5, the contract period will be 5. Simple as that. Imagine if you going to purchase a vehicle on a lease. Okay, so will they allow you to uh, keep the vehicle after you made the installations? Okay, so will they, which means in a simple terms we can say, okay, so I have paid 5 lease installment, okay, but the useful life is 8 years. So will they say, okay, just keep it, use it, the moon version, then just keep it, use it? Will they say like that? No. If the contract period is 5 years, the annual lease installments will be the 5 payments. Okay, so yes, so the right to use asset, the cost of the asset is 50,000. Okay, 50,000 divided by 5, 10,000 is the depreciation. Depreciation 10,000, and this is a motor vehicle. So since this is a motor vehicle, we have to mention that in distribution expenses, right to use asset, depreciation 10,000. 10,000. Okay, so yes, please write it. Okay, next, income tax adjustment. Okay, so other income, operating expenses. Okay, so see, in the adjustment says income tax payable as at 31st March 2015 is 550, which means income tax payable at the last quarter. Income tax payable at the last quarter. Okay, so what is the income tax paid under the current self-assessment? Okay, so in the adjustment number 1, okay, if you see the operating expenses, they say income tax paid under the self-assessment is 1,100. Since income tax, right, paid is 1,100, payable is 550, 1,650 will be our income tax. And income tax payable 550. So you might also, what about the provisions, the adjustment, underpayments, overpayments, under provisions, over provisions? Why that is not included here? Because The company is incorporated in the current financial year. Since the company is incorporating the current financial year, we don't have balances. So since we don't have balances, we don't have provisions. Simple as that. Very simple income tax adjustment. Okay. So next adjustment. The financial statements of the company were authorized to issue by the directors on 31st 5 2025. Okay. And the following events have been occurred after 31st March 2025, which means they are testing the knowledge of adjusting and non-adjusting event. Okay, so the adjusting and the non-adjusting event standard have been discussed when we are doing the basics. Okay. The verdict of a court case filed by a customer against the company was given on 30 April 2025. Accordingly, 600,000 was paid by the company on this day as a full settlement of the claim. Okay, this case was filed on 10/12/2024. Okay, so this case was filed on during the financial year. So again, I'll teach the basics of adjusting and non-adjusting event. Okay, so simply this is a financial year first for 2024, 31st March 2025. Okay, the directors have authorized on 31st May 2025. Okay, so the verdict is given between this date, verdict, okay, but the case filed, okay, during this date, during this financial period, okay, on 10th month. Okay, so on 10th 12 2024, which means during the financial year. So this event needs to be adjusted because the evidence is happened during the financial year. Okay, so we have to adjust this event. So how do we have to adjust this event? Simple as that. We have to mention this in other cost. Okay, so other cost, other expenses, compensation 600. Since the 600 is not paid, compensation 600. Simple as that. Okay. Next, the trade debtor existed as at 31st March 2025. Okay. Okay. On the last date of the financial year was declared bankrupt by the court on 15th 5 2025. So which means is during this gap. The trade receivable shown in the trial balance was include that 3,500 receivables from this debtor. Okay. After making summary reminders, the company was able to collect only 1,200 from this debtor. Okay. Out of 3,500, we are only able to collect 1,200. So out of 3,500, we only able to collect 1,200. So balance 2,300 was our bad debt. So in the TR, In the trade receivables, we have to reduce 2,300, and no, sorry, not on the under cost, in the distribution, bad debt as 2,300. Simple as that. Okay. And the directors proposed a final dividend 500,000 for the ordinary shareholders on 25/5/2025. Okay. So between this year, but we cannot adjust this event because there are no evidences during this financial year. Yes, directors have proposed the dividend, but there is no evidence that might a suggestion or whatever the things happen during this financial year. So on that scenario, we cannot adjust that event in the financial statement, but we have to disclose that statement as a note. Okay, so it's a note. It's a note. Okay, so where do I write? Yes, here. Note number. Okay, directors proposed final dividend as 600,000. The full amount needs to be not 500,000. The full amount needs to be right. Okay, we have to write the full amount, not the summarization of 3 zeros. Okay, so after that we can go to the adjustment number 1, administrative expenses. Okay, admin expenses to balances is there 6,500. In the we'll go to the adjustment number 1. Okay, distribution cost. Okay, distribution cost 6,900 is there. Depreciation of the manufacturing plants. Yes, depreciation of the manufacturing plants, it's included here and here, no need to worry. And depreciation of the office equipment, yes, it's included here, so no worries. Factory building rent is included in the cost of sales and the closing inventory, no worry. And income tax paid under the self assessment, yes, it's included here. And that's the pretty much. Sales revenue is given 92,000. 92,000. Cost of sales, okay. Gross profit, okay. Other income 4,500. Other income 4,500. Okay. Profit after we have to calculate. Manufacturing plant revalued amount, okay. Office equipment, okay. Accumulated depreciation, okay. Right to use asset, okay. We have did that. Inventory, okay. We have did that. Cash 2,500. Cash 2,500. And trade receivables 25,800. 25,800. Trade payables 20,000. Trade payables 20,000. Okay. And trade payables, okay. Stated capital, which means the share issue, 125,000. No balances, only the share issue. Profit after tax, revaluation surplus. Okay, we have revaluation surplus. It's not down here. And the interim dividends paid, okay. Dividend paid 1,200. Okay. Total comprehensive income So now we'll go with the numbers. 45,600 is our gross profit, and distribution expenses. Okay, which means 19,200. And other expenses 600 only. Finance expenses, this is only. And administrative expenses 24,100. Okay, administrative expenses 24,100. Distribution 19,200. Other expenses 600. And finance expenses 3,126. Altogether, the total expenses was 47,2026. Okay. So we'll calculate our net profit, profit before tax. Profit before tax 3,074. Okay. Income tax, we have to reduce the income tax. So profit for the year 1,424. The total comprehensive income will be 19,924. The total comprehensive income needs to be added here. Revaluation reserves 18,500. Okay. The profit for the year 1,424 needs to be added here. 1,424. Out of that, interim dividend 1,200 paid. Okay. So the balances will be 1,225,000, 18,500, 224. Total equity 146,124. Okay. Ordinary share capital will be 125,000, and reserves, revaluation reserves 18,500, retained earnings 224, altogether 18,724. Now the 12,500. Yes, 125,000. Altogether 146,124. What will be our current liabilities? 9,600 plus 5,382 plus 550 plus 600 plus 20,000 plus 36,132. Yes, I think it's not visible here, so I will write here 36,132. Okay, so this is the total. Okay, total of this. And total will be 199,600 will be our total. Yes, 199,006. Okay, so here The property, plant and equipment, the carrying amount was 122,000. Simple as that. Property, plant and equipment, 122,000. Right of use asset, 10,000. Sorry, not the 10,000. 50,000 was the balance. 10,000 was the depreciation. Okay. So 40,000 will be the amount. Trade receivables, 23,500. Okay. All together, 23,500 plus 11,600 plus 2,500, 37,600. This is 162,000. All together, yes, 600 is there, 9 is there, 9 is there, 1 is there. Financial statements, SOFP is balanced. SOFP is balanced. So, Buddha, what I want to tell is, you have to, so this will be the total column. If you want, you can fill this, but what you only need is this 122,000 only. Okay. So, what I want to tell is, Buddha, the most of the students, so in the most of the students means, yes, around 50% of the students. Okay. So, in the 2025 A level, okay, so my 50% of the students have told, sir, the 2025 paper was very much different from the other papers, sir. Okay, so as you told earlier, the manufacturing accounts, the manufacturing part was there. So no worries on that, but there is a profit, so we don't know. But anyways, we did these things and all stuff, and thanks to God, my students were able enough to get a passes, and lot of students got a good marks. Okay, the students who was in a W stage was able enough to got B's, and yes, most of the students got B's. Okay, so B passes. So what I want to tell is, don't be afraid about the questions. Okay, don't be afraid about the questions. Always stick with the basics. If you stick with the basics, if you have a good knowledge about the basics, end of the day, you will end up in a very good position. Just the final advice, the final piece of advice from me. Okay, so yes, I forgot one thing: the notes, the profit before tax, note number 1; income tax, note number 2; property, plant and equipment, note number 3; right to use asset, note number 4; and this will be note number 5. Okay, please remember to put the notes, because the every value, the every number, the every note have some stipulated marks. And one final piece of advice is, and the golden advice is, if the company balance, if the financial position doesn't balance when you're doing the company accounts, okay, imagine in the exam, if the financial position doesn't balance, don't waste time on balancing those financial positions. Okay, don't chase down the errors. Okay, what are the errors I made? Don't waste time to balance those financial statements. If the financial statement doesn't balance, okay, it doesn't balance, skip it. Skip and go to next question. Because if you spend more time in order to adjust the financial statements, what will eventually will happen is, you will waste your time. You can't do 5 questions in 3 hours. It's very much hard to do 5 questions in 3 hours. Okay, if you have a proper time management, you can. So try to do this whole company accounts within 45 minutes. Within 45 minutes. And golden rule, if the company accounts doesn't balance, don't go and search and errors. Go to the next question. Simple as that. If you have time, so imagine if you done the 5 questions in 2 hours 45 minutes, till 15 minutes remaining, yes. On that time, you can search for errors, you can balance it. Even you balance the company accounts, you will end up in 40 marks. Okay. So even you don't balance the company accounts, you can achieve at least the maximum of 35 marks. Just 5 marks. Okay. So rather than to get the 5 marks, don't waste the 40 marks. Okay. Most of the students try to balance the company accounts. Okay. Try to chase that 5 marks, but end of the day, what will happen? They don't have enough time to do the fifth question. They they might get the 5 marks, but they will lose the 40 marks. Okay. Sometimes they don't even get the 5 marks, they lose the 40 marks. To get the 45 marks. In the accounting paper, what you have to do is minimize the loss. Minimize the loss. Please keep it in your mind, minimize the loss. That is the golden rule in the accounting. Okay. So simple as that. So I will give you 2 minutes. Please write the all things, and after that we can conclude the session. Okay. So yes, we'll see you at next session. I think next Tuesday. Okay. So yes, thanks for joining. Hope you enjoyed this session. See you in the next class. Thank you.